All right, and last but not least, for November 2018, we have Cisco, our tech position. And so the question becomes, do we stay or do we go? And it looks like we are forced to go. Cisco is no longer in our basket of stocks, so you don't have a choice here. Let's take a look at the scores. All right, 1, 2, and I would say a far 3. We have been in Texas Instruments before. Great company, located here in Dallas. KLAC, I don't know a whole lot about, to be honest with you. From my understanding, KLAC basically engineers semiconductors. They do like chips and stuff like that, right? So they're on par with the likes of Intel. I would say they're probably a much smaller company, smaller version of what Intel does. So that's what's going on there. So let's take a quick look here at the numbers. Looks like the dividends are about the same. I'm going to go back just real quick to the score here. I'm going to include these guys. I forget their name. I think it's Maximum or something like that. But anyway, I've looked at them for a while now, so we're going to kind of take a look at them as well. All right, so all three dividends are above the average, so that's good. Looks like as far as price goes, Texas Instruments has come way up. I think we got in a long time ago at somewhere around 84. KLAC looks like it has come down, and then Maximum's come way up. PEs, I'm going to go ahead and compare all three of these, because all three of these are chip makers. Okay, they make chips for different reasons, but they're all chip makers at the end of the day. So it looks like KLAC is going to be the cheapest, which makes sense because of that big price drop, and then Texas Instruments after. Both though are above the sector average, except for KLAC, of course. All right, let's take a look here. We don't have any numbers for the average PE. We do see that Texas Instruments has come back a little bit, but that's it, so we can't really look at that. Net profit, looks like Texas Instruments beats them out again. KLAC is I would say a close second as far as net profit goes. Operating profit margins, again, looks like they're all about the same. Texas Instruments beats them out. Return on assets, oh my goodness, that's big. You know, Texas Instruments beat them out, because remember, these are all chip makers, right? So they all pretty much do the same thing. They all pretty much have the same equipment. So if Texas Instruments is making more money with the equipment that they have, then they are doing much better. All right, we don't have a number for cash, unfortunately, for Texas Instruments. We can assume that it's going to be the average 0.19, so that's going to be right in line with the other two competitors there. And then cash to debt, I'm not going to look so much, because see, this thing is total cash, shares outstanding. Yeah, I'm not sure what the problem is with the formula, but for some reason we have total cash here, but I guess maybe the shares outstanding are not available. Let's see. Yeah, that's what's going on. So the shares outstanding is not available, so we can't compare this. Cash to debt, this means that there's not a lot of debt. Looks like Texas Instruments has the most debt out of these guys, but I mean, those numbers are stupendous. I mean, that is great. All right, shares short. Again, this is because we don't have the shares outstanding. But again, we can just assume that it's going to be about the average 3%, which is in line with these other guys. Maximum is a little lower. Looks like Texas Instruments is 17% off their highs, which is in line with the other three. So far, I mean, all these guys are pretty much right around the same place. Time, off the lows, 9-15% roughly. The alpha is much higher for Texas Instruments compared to the other guys. The up moves looks like they're a bit higher for maximum, and our 1 month average is better for Texas Instruments. Volatility is much better, and then of course our beta score is better for Texas Instruments. Let's take a quick look at the performance here. We see Hewlett-Packard actually has the highest average, followed by Qualcomm. Qualcomm has been in a fight with Apple and has been losing, and that is a company to look out for, because if things go their way, then they are in a great position to take some money out of Apple, basically in the lawsuit. Looks like Intel's positive. Texas Instruments is just negative, so that's not a great thing. Hewlett-Packard is our MVP, of course. We're not going to look at Hewlett-Packard. Hewlett-Packard is a decent company. I'm not going to say great company. It's a decent company. They've had their issues for sure, but they are way down on our list as far as beta goes. I mean, look at this volatility. The alpha is really good, but we are right now in a downtrend in the market, and so those alpha stocks are going to get hit pretty hard, and I think we're going to see that here. Let's take a quick look. See, we're seeing it here. Hewlett-Packard down 5%. Texas Instruments down 12%. Oh my goodness. So I mean, the entire tech sector has taken their lumps, but we don't expect that to continue. I think we will stick with Texas Instruments. Like I say, we've been there before. We can go back very easily, and we have KLAC coming into a very close second, I'll say, but just based on numbers alone, okay, just based on numbers alone, based on past performance, the Texas Instruments just looks better. Like I said, KLAC is coming down from 105, whereas Texas Instruments is coming up from 81, and the PE, like I said, is about the same, considering that KLAC has come down and Texas Instruments has come up, right? So Texas Instruments,